Hey, it's Friday night, right? 5:30. I'm just trying to chip in for a friend's birthday present, so I jump on my phone, go to my online banking app. But I can't do anything. The bank's offline. It's not available. I dig a little bit deeper, check out a few posts on X and other articles in the media, and it turns out it's not just me that's going through this. Most of the banks are offline. Even airports and other essential services are starting to report problems. So, is this it? Is this the end of the world? Should I start stocking up on toilet paper again? Before we get into it, my name is Darcy Ungaro, and I'm a financial advisor and podcast host for The Everyday Investor. I'm really interested in the future of investing, the risks present, and the opportunities. If you want to join me on my own journey of learning, then check out a few of the other videos that I've done and subscribe. The CrowdStrike fiasco from the 19th of July 2024 really shook things up a little bit. It knocked out banking, it knocked out travel, emergency services, the works. Didn't signal the apocalypse, but it reminded me of something really important. The best time to be prepared is before the bad things happen, not after. Now, this does require you putting your brain into a very dark place to consider what that world looks like in order to adequately plan for it. So, as long as you can go there and then come back to reality, it's okay. When life is good, though, when you've got your job, your family, and your health, there's very little incentive to think about those worst case scenarios. You're in this kind of blissful headspace, ignorance, where you're just living life, but you're also kind of ignorant, right, about how fragile things really are. And just look around, right? Elections, wars, famine, disease, and a world that's just constantly changing with technology. If the end isn't nigh, then maybe it's near, or at the very least, it's closer than we think. But here's the deal: the future is full of both the nightmare scenario and the dream scenario. It's the bad dream for the optimists, and it's the pleasant surprise for the doomsday preppers. So when we invest, we actually have to consider both of these worlds. We have to consider the good, the bad, I guess, and the ugly as well. So, how do we invest in this new world with all of that equal measure of terror and promise? Well, this might sound like a really terrible bit of financial advice, and it probably is actually for some people, but for entertainment purposes only, let me introduce to you the idea of an 80/20 zombie apocalypse portfolio. It's just a way to invest using best practices with a little tilt towards something that could be valuable if the world goes into more of a bad place or more of a good place. So, step one, put 80% of your money into a mainstream portfolio. Portfolio is just a collection of investments. Mainstream just means it's probably what you're already doing right now. So, you're going to be investing in the typical things like income style investments, which might be cash or savings in your bank. It could be bonds or a bond fund, also known as fixed interest. So, on the growth side of your portfolio, you might want to have shares or equities, commercial property, and infrastructure assets. Basically, all of the investments that can increase in value in an unlimited way, but with uncertainty around how much they'll increase or decrease, as well as how much it will pay you. But when you roll that all up, that's more or less what any retirement fund would look like. Most managed funds will kind of look like that. And if you're here in New Zealand and you're investing via KiwiSaver, that's pretty much what it will contain: cash, fixed interest, property, equities. But the good thing about retirement schemes like KiwiSaver is that the provider is trying to blend growth and income requirements in a perfect way to achieve that nice blend of a growing balance without scaring people too much along the way. If the world keeps on doing what it's always done, this mainstream investment strategy will actually set you up really nicely for retirement. That is a fantastic baseline assumption because it's incredibly risky to experiment with things other than things that have already worked in the past. You're just speculating, right? You have no idea whether it will work or not, and you're really approaching gambling the more you do that. But what if the future isn't like the past? 4 years ago, we got a bit of a wake up call. The world can change in an instant. That's what we were reminded of. Economies shut down, interest rates dropped, and then came inflation, rising interest rates, and war. Maybe things will settle down. I genuinely think they will. I hope they will. But what happens if they don't? What happens if it gets worse and I could have done something now? What if the US isn't the world's superpower anymore? What if expectations for lower interest rates don't come true? And what if your investment accounts get wiped out with the blue screen of doom? These are not far fetched scenarios. And honestly, nobody in mainstream finance is really incentivized to warn you about them. But systemic failures like the internet going down or power grids failing could destroy the wealth that you've worked so hard to build. So, here's where step 2 of this strategy comes in. We take 20% of your overall portfolio and we put that into alternative forms of money. Now, these aren't technically investments, these are just places for you to park a portion of your wealth. Now, one option in that 20% component will be digital, and the other option will be analog. In the digital, we'll put in there Bitcoin because it might be part of the future financial system. On the other part, the analog part, we'll put in there physical gold and silver. Why? Because it's been used as money for over 5,000 years. So again, what's worked in the past, yes, the more distant past, has a possibility that it will work again in the future. Makes sense. But let me break down why this is a good idea just a little bit deeper. Blockchain is simply a technological advancement. That's where Bitcoin basically came from, or blockchain was kind of brought to the fore when Bitcoin was released into the wild. And much like AI, it has the promise of changing a lot of our life. It makes the ability to trust data so much better. And that's why we're seeing Bitcoin and blockchain based value systems or value tokens really disrupt the money space so fast. So, if our world actually looks like utopia, well, chances are there's been a bit of a tussle, but there's now a decentralization of power. Chances are the power that technology can bring to humanity is owned collectively by humanity, and there isn't a centralization or some sort of puppet master in the middle that's trying to allocate resource according to their designs. Well, if we're going to go down that path, then we probably need to consider what the most popular digital asset is today. That's Bitcoin. The Lindy effect basically states that the longer something has been around for, the longer it's likely to be successful again in the future. I'm butchering it, but that's my definition. Therefore, if we have something new in the form of technology, like blockchain-based technology, like Bitcoin, then if that is the most popular one today, and it is measured by market cap, then it makes sense that that would be the one that we acquire today so that we actually have a form of wealth for the type of future that we might be migrating towards. But what if the world tilts a little bit more towards the Mad Max scenario, as some like to think that it will? Well, Bitcoin's great, but not if you can't access the internet this week because you didn't hug enough trees or share the right narrative. Physical, non technical, and recognizable forms of money like gold and silver are the way to go here. Now, you don't have to be a believer in any of these assets, by the way. You just need to understand the reasoning behind holding them in case things go haywire. It's that simple. These alternative forms of money, though, could help protect you financially if we end up living in a world that looks more like Shaun of the Dead rather than the whole 2001 Space Odyssey thing. Now, of course, there are other assets that you might want to consider owning for that sort of scenario, but let's keep this simple, keep it family friendly as well. Gold, Bitcoin, silver, these are all forms of money that aren't controlled by one nation. They're beyond borders. And in a world where geopolitical shifts can and do happen, they could become extremely valuable, either to use in exchange in some sort of post-zombie apocalypse world, or on a larger scale, maybe it forms part of a base layer for a new financial system. Now, I'm not saying that everybody should invest just like this because the risk is really high. And holding these assets directly doesn't generate any revenue. And it also actually comes with its own entire set of risks that are probably beyond the scope of this one. But like Upton Sinclair said, it is very difficult to get a man to understand something when his salary depends upon his not understanding it. And there are far too many people that are incentivized not to discuss the importance of holding physical precious metals and digital assets like Bitcoin. Investing isn't always about making gains. Sometimes it's about securing what you've already built for the long haul. And holding some physical gold and Bitcoin might just be the move that saves you if things ever get beyond that point of no return. Now, whether it's 80-20 or whether it's 95-5 or 97-3, it doesn't really matter, right? As long as you've kind of considered the likelihood, I guess, or the probability of both these events happening, and then tilting your portfolio according to what your core convictions are there. So we know that the future is totally uncertain, but what you build, why you build it, and who you're building it for, that's what really matters. All you need to do is the best that you can and be responsible with the information that you have today. Now, as I leave you, just remember that a lot of these assets and strategies might be actually really high risk, especially if you're in a vulnerable position in any way. So make sure that you get advice before you take action on any of this. That's it for me, though. Stay prepared out there and maybe keep a little room in your portfolio for the zombies. See you next time.